M-commerce, with its widespread penetration, is soon becoming the most popular medium of reaching out to the unbanked. An infant in the industry, it is yet to survive the complexities due to evolving business models. With rapid growth in users and expansion in coverage of mobile phone networks, mobile technology for financial transaction has been gaining popularity across the globe. The topic for our second panel discussion: mobile financial services, developing strategic partnerships, and innovative business models.
To enlighten us more on the topic, we have with us our moderator for the discussion, Ms. Alpana Doshi, CIO, Reliance Group. Ma'am, may we request you to please come on the stage? Ms. Alpana Doshi is currently Reliance Group's Chief Information Officer and Business Head of Reliance Tech Services, the IT organization of India's foremost integrated telecom company. Ma'am, with over 2 decades of experience in information, communication, and entertainment industry, is driving key IT transformational initiatives to support business growth for Reliance. A member of Board of Directors of TM Forum, she has successfully led major initiatives in telecom, media, and entertainment industry, with telcos like Verizon and Reliance, system integrators and suppliers like Telecordia Technology and Mahindra Satyam, and management and strategy consulting like Deloitte. Ma'am was awarded the Women's CIO of the Year 2010 award by CTO Forum India, the Best Paper Award by IEEE Communications for a pioneering work in telecommunications. She has also been awarded Brand Ambassador Excellence Award by Mahindra Satyam and Excellence Award Verizon Secure on Device API Innovation Award. Ma'am, we welcome you to Communicate 2011.
I now take up the opportunity to invite other distinguished members of the panel to kindly join us on the stage, please. Mr. Sanjeev Kapoor, Head Government and Telecom Business, Infosys.
Mr. Hemant Joshi, Telecom Leader, Deloitte.
Mr. Ravindra Deshmukh, Managing Director, UPass.
Mr. Sanjay Srivastava, Senior Vice President, TTSL.
Mr. Sandeep Bangia, Head Marketing, Maharashtra and Goa Circle, Idea.
Mr. Neil Chaudhary, CMO, Obope. On behalf of Symbiosis Institute of Telecom Management, we welcome you all.
I would now request our chairperson to kindly initiate the session.
Good evening, everyone. I am sure this has been a very exciting, long day, and my apologies, first of all, to keep you all waiting for even longer time. But I hope we can make this session very fruitful for all of you. First of all, I am very thankful that you have taken so much effort in terms of getting all of us here, and I hope that anything that we share, you'll find a way to break that and say something better, right? Will you do that? Yes, sir. Yes, that's the spirit. So I would really encourage all of you to participate as we go through the sessions. And, we'll make sure there's enough time for you all to express your views as well. Okay. So with that, I think I'll just briefly, say that in the last probably 22 years of telecom experience, I think I have seen the world really move from point A to point Z. However, the basics have not really moved at all. So what I mean by that is, during my time when I saw technologies like ATM, etc. come up, after that, so many things have happened that in the last 2-3 years, you actually lost count of what all of these technologies are going to do to the consumers. And effectively, every time I go back, I still come across a whole boundless ocean of legacy networks. Probably this legacy in India is still very, very fresh. I think in US, etc., it has built to quite a large degree. But I'm actually sometimes finding it, in fact, good to have some of the operators like us at Reliance Communications speak that, yes, we have built in a legacy. The systems are able to support XYZ, but they have still enough of a breathing room to support another 5 years, 10 years, whatever it might take. So which means that the fundamentals are extremely strong. And I think nothing better than you students would realize that how important it is to have all of this basis and fundamentals in every sphere of life, whether it is technology, personal life, or commercial life, right? So when on today's topic of, all of this mobile financing, M-commerce, I don't know what other names it's being called right now, M-Cash, M-Paisa, M-Rupee, anything that you can relate to. Ultimately, I'm just expecting that it would be some interesting viewpoints from all of our colleagues here who are representing not only operator, including myself, as well as suppliers, systems integrators, and consultants who seem to have, and with all due respects to all my consultants here, is that they will be on whichever side that I think the students want to be, right? Yeah. So they have that versatility that we can always account for. So without further ado, I would like us to give this a good start. And I will request maybe each one of us here to first give us some 2-3 minutes of introduction and set the stage for a bit of perspective, right? So why don't we start from this end? Yeah.
Hello. Yeah. Okay. Good evening, everybody. Good to see so many smiling faces in the audience. So let me start off with a very little brief introduction on what we do, which is what Overpay Inc. does, and then I'll kind of gradually lead into why mobile money and why mobile money is so big for India. What do we do? We are a California-based company. We deliver, devise, customized solutions which will enable market makers to make their own branded mobile money services. Is this working? Yeah. So we do low-cost solutions for our suppliers, for our partners. We do digital wallets, we do money transfer, we do disbursements, bill pay, minutes top-up, cross-border remittances, M&M commerce, etc., etc., etc. Now moving back to why India, right? You think today India is at the cusp of, you look at just sheer numbers. We got almost 900 million mobile subscribers. Let's say, there are dual phones, so at least 650 mobile subscribers. The phone is becoming the heart of every consumer's ecosystem. Your phone is everything, right? And you just ask yourself. You all do so much on your phone: your email, your social networks, sending messages, calling people. Those are the basics. But today, as the country evolves, the phone will become your financial instrument. The phone will become your internet. The phone will become everything. Hence, mobile payments, mobile money becomes so much more important in this country. And I'm just going to quote a few demographics, some real reasons which we've kind of gathered over the last year from industry reports as to why mobile money is so important for India. And I'm just going to read it out because I'm just quoting it. So I'm just going to read it out to you guys. bear with me for a minute. So you just look at the demographics, right? Today we have 51% of this population of ours, which is less than 25 years, which is all of you here in the audience. 67% who are below 35, and I'm talking about more than 1 billion population people. So if you have 50% who are less than 25, that's 500 million people, who are all very mobile savvy. You have a workforce of 761 million by the year 2012. There's a need gap, right? There's 1 billion people, there's 800 million cell phones minimum. How many bank branches? 80,000 bank branches. Do the math, guys. So there's not enough banking opportunities for people. You know, how many people still go to a bank, and what are the headaches which are involved? And with due respect to all bankers here, banking is, you know, in my mind, 1.0. Mobile payments, mobile banking is 2.0, and we're all living in a new technology today. There's a whole unbanked paradox, right? So the regulator, RBI, who's very progressive, what is the buzzword you're hearing all the time today? You're hearing financial inclusion. You want the bottom of the pyramid to be serviced. You want people who are not banked, the unbanked, to get access to their first bank account. And this is where mobile money comes in. You know, you have 50% of rural population who keep their savings at home. You have 69% of population which is unbanked. And you have mobile banking, which will bring down the cost to serve customers by 50 to 70%. There's a migrant population in India. There's a blue-collar exodus. There's a white-collar exodus. There's exodus for education. You guys are here from different parts of India. You're all here to study. There's a line blurred between mobile banking and traditional banking. Interest payments, microfinance payments, etc., etc. Keeping all this in background, it leads us to one realization. And that's the reason why we do business in India with our partners, which is Nokia and Union Bank and Yes Bank. There's a huge addressable population of people who need access to a financial instrument. And that's why mobile payments is really going to take off in this country. You know, you must have, if you've done a little bit of research on mobile money and mobile payments, you must have heard of M-Pesa. You know, they are the big boys in this whole category. They have 14 million or 15 million subscribers in Kenya. And everyone just talks about M-Pesa. But, you know, let me be honest. In 2 years, India will become the holy grail of mobile money. It'll be the largest deployment in this country, not just through Obopay and Nokia money. It'll be through all the other partners who are coming in. And the only way that's going to happen is through a robust ecosystem. Mobile money is about an ecosystem which is vibrant, about partnerships, about banks, associations. The whole partnership is what is going to make mobile money grow. Here you go. I think that's my 2 bits, and I'll jump in again.
Thank you, Neil. I think that was helpful, I'm sure. We'll just move to the next speaker. Please go ahead and introduce yourself, I think.
Thanks, Alpna. Good evening, everyone. So Neil talked about some very important data points which gives us the kind of framework that why the mobile and the financial services marriage is so exciting. I would just try to set some more context around that. So what is really happening and why everyone is really talking about mobile as the platform? The reason for it is that if every 3 years there is a fundamental technology shift which happens. Today, if you see, the telecom services or mobile services have become ubiquitous service. You almost take them for granted. You can take it anywhere. If we build on that and we take the analogy to the next level and we ensure that the mobile or telecom services actually becomes the platform, then the plethora of services which can be offered, whether it is retail, whether it is financial, whether it is security, the space just opens up. So what it can really happen is that the tremendous investments which have been done for offering telecom as a service can now serve for telecom as a platform and a series of services which can be offered there. And when people are working on this particular aspect, the second key aspect is right now we are just at the throes of start of the evolution. So you're seeing whether it is the telecom companies, whether it is the mobile companies, whether it is the financial service providers, whether it's a bank, everyone is trying to have an end-to-end ownership. I think where finally it will end up over the next 18 to 24 months is that everyone will need to cooperate together and make it a success. The success would really come when there is an open platform, when there is an interoperable standards, and together the various people across the value chain, beginning right from the technology service provider to the risk management, to the banking and financial services, to the network providers, and then the application service providers. Everyone's come together and really creates a synergistic value chain. And this is really important because when we need to move and offer mobile-based financial services, there are three different aspects of the service. There is an enrollment or a customer acquisition related activity. There is a servicing and the risk management related activity. And then there is finally the underlying technology and services related capability. And in each of the different parts of the value chain, we have already existing service providers who specialize across. So you have application and utility providers, you have system integrators who are absolutely great and combining the hardware, software and running the app platform. You actually have the banks who specialize in risk and cash management. You have telcos who are good at the various ubiquitous retail distribution, sales, enablement, billing, collection. And therefore, there will be enough value across the value chain for each one of us. I think what we need to start doing is putting our heads together to see what is the right business model for the end customer, how do we serve it. Once we have the right business model, I'm sure everyone across the value chain who adds value will make value. So that's what we think about it. Thanks.
Okay, thank you.
I'm from Deloitte, and every year Deloitte does global and India predictions, TMT, Technology, Media, Telecom predictions. And you can go to the Deloitte website, deloitte.com/TMT, and we've been doing these predictions. You'll find predictions, and our success rate has been about 75%, hit rate. Last year, 2011, beginning of this year, we made a prediction that the stage is set for interplay of telecom and other industries and disintermediation, the real disintermediation of the markets. And the interplay is going to create a much bigger opportunity than the individual industries working in silos. And I'll share some data points with you. So for example, healthcare, it was about $35 billion in 2009, is expected to reach to about $77 billion in 2012. Education, about $57 billion in 2009, expected to reach to about $80 billion in 2012. Information and entertainment, from about $13 billion in 2009, expected to reach to about $24 billion by 2014. The number of bank accounts are going to increase to 800 million by 2019. These are some very, very large data points. The other data points which I would like to share is, look at what is the population of this country. We are about 1 billion plus. And how many banks we have. I mean, there are various measures we can adopt, but it is somewhere between 100,000 and 200,000, depending on whether you include post office or you don't include post, and so on and so forth. So I think the general view is not more than 200,000. You do simple arithmetic and you will see how much population of the country is not covered by the banking. 60% or more is unbanked population in this country. To create a physical brick and mortar banks is a huge task. So the case for mobile banking is very, very clear. The other, the other interesting data point is, what are the number of subscribers you have? You have more than 890 million subscribers. Even if you discount for double SIM and whatnot, you have 700 million subscribers. Huge penetration. One of the entities which I audit, they have a dealership network of more than 1.2 million dealers spread out in towns and cities, and perhaps my friend on the right will elaborate on that. So I think the network which the telcos have cannot be matched by the banks. No way it can be matched. So this is one second data point. The third data point is, you look at the ARPUs of the telcos. They are dropping. Voice is speaking. So they need to get new sources of revenue. So from the telco's point of view, there is a compulsion to look at new sources of revenue. So these are some of the very interesting data points. Recently, Deloitte had a global leadership, TMT leadership in Beijing, and a CEO of a very large Chinese company He was there and he specifically mentioned, don't quote me in public forum, so I'm not going to give his name. But he said that, something very shocking, and perhaps many people here may not like to hear, that ultimately telcos are a dumb fat pipe. Whether we like it or not, it is a dumb fat pipe. And what goes through the pipe is really going to create revenue. So I think these are some very, very interesting data points. And the case for a mobile financial transaction, mobile financial services, I think it's compelling. It's staring us in the eye, So I think with this, I hand over.
Okay, thanks. I think these are raising some very interesting points and questions and turmoil, at least in my mind. So I think panelists must start getting ready for a few questions. But before that, I think let's complete the introductions here.
Thank you. Good evening, everyone. My name is Sanjeev Kapoor. I'm from Infosys. I run a few businesses for Infosys, including telecom. Very delighted to be here and meet with all of you. Let me spend a minute in trying to explain how the ecosystem is for mobile financial services, if that is the broader word. So everybody understands that the banks have a key role in this setup, and a lot of people who will challenge what is the role of the bank. But in today's setup in India, a bank is a key player. RBI has not regulated that the telecom companies can hold cash. So every day, whatever holdings exist with the telecom operator have to be flushed into a bank account that stays with the bank. But very importantly, banks also have another role, and that is more from a financial inclusion perspective. Banks have been given mandate by RBI to go open 20, 30, 50 million new accounts. And these accounts are going to come from the bottom of the pyramid. They're obviously coming from the people who are unbanked. Those metrics are absolutely right. There are about 1,44,000 bank branches in India, out of which 84,000 are from scheduled banks. The rest are regional rural banks. If you look at post offices, there are 1,55,000 post offices in India. When you put these two together, the number is roughly about 300,000 financing in locations, points of presence. Compare that with the 2.5 million points of presence that the operators have. Together, the total number of retail distribution outlets mobile operators have together in India is 2.5 million. So clearly, banks have a role in this. Banks really need to, the banks have been told to go open new accounts, and there is no way they can open these accounts without the help of telcos. So telcos are key players into this. They're the second entity in this ecosystem. They're obviously, the ARPUs are dropping, they need more stickiness, they want more sources of revenue. So this is a great offering, right? Telcos bring two things. They bring the distribution reach, 2.5 million outlets. They bring the subscriber reach. Subscribers, our friends mentioned 890 million or 700 million, whichever way you look at it. It's a huge reach as compared to the banking setup. But then there are other players in this ecosystem which are very important to talk about, right? We just talked about distributors. The distributors are people who are, from a pawn shop to a true outlet from an operator perspective. They're in need of sources of revenue. They make 1 to 2 to 5% of the prepaid cash vouchers that they sell today. If they have a service offering such as mobile payments or mobile transaction or banking transactions, they have an alternate source of revenue for themselves. So it's a great opportunity for the distributors to come in and join this. The fourth important entity in this is the merchants. Now let me explain what is the purpose of the merchants in this setup. When you look at creating a mobile of using this wallet, because just keeping the money is only one use case. By the way, it's an important use case, it's an important setup. There are people in India who don't have a safe place to put money and who don't have enough money to go open a bank account with a nationalized bank today. But so if you look at a typical rickshawala in an urban situation, the 30 or 50 rupees that he saves in a day, he needs a place to put it. So, but there are other use cases that are needed. How do you spend this money, right? How can you create cases where the person who has this wallet is able to spend this money? That's where the merchants come in. Merchants are of all kinds, physical merchants, such as that neighborhood grocer that you have, Or they could be online merchants. Just imagine a situation where you're on a Make My Trip, or you're just buying, something on a grocery food store. One of the drop downs says Visa, American Express, and then it says mobile money. That's one of the options. You put in your mobile number rather than putting in your credit card number. So merchants of various kinds are critical to this setup. But then there is another category, which is platform providers and technology providers. That's where Infosys comes in, by the way. We help build the technology that puts all of this together. And there are lots of companies in India who are trying to build platforms. This is going to be a very, very large volume transaction. So it requires scale, it requires investments, right? That's where we come in. And then there are other technology providers as well. There are technology providers who create new offerings. Handset manufacturers. Handset manufacturers are a key part of this setup. Nokia is in this in a big way. They're trying to put something on the phone that can help you transact using mobile money and all of that. There are NFC. I don't know if you've heard about near field communication, which is a big thing. I mean, if you can touch something and the transaction happens rather than going through a menu process. So those technologies need to come in. So that's the sixth entity. But the most important in this whole thing is the government. The government, which is the seventh part in my mind of this ecosystem, is a critical part of this ecosystem. Through social structures and through social mandates, I'm sure you've heard about things like NREGA, National Rural Employment Generation Scheme, that the UPA 2 has founded. There's 100 rupees being paid out to every unemployed person in India in the villages to create employment for them. The kind of transaction volume that the government can create through creating social mandates that come out to help the social inclusion scheme and thereby driving financial inclusion. Their policies, the way they look at this, etc., is a critical element. So these are the 7 players that we think are critical to build the financial ecosystem around mobile and mobile payments.
Thank you, Sanjeev. I think we'll move a little quickly now. So that
Evening. I'm lucky to be neither a bank nor a telco, because the picture I see is going to be very different than what it exists today. Because eventually money is a very funny thing. The laws of government fail to apply to it. Laws of physics don't apply. Money never changes forms, it only changes hands. We say more than the deposits in India are about 25% of the GDP. So remaining 75% money has been changing hands. People don't really spend. When they spend, it changes hands. It doesn't get accounted for. Anytime you go to a chemist and buy medicines, he says, do you want a bill? I'm going to charge you 3% extra or 4% extra. So that is one accountability issue, that is what is stopping the money to be converted into any form that is answerable to the government. And I think finance is not money alone by itself. It's not currency note. It's the buying power. It's an earning power. So long as people have ability, like credit points that you get on your travel points, shopper stop points, all this translates into value for you. As long as the banks and the telcos think of doing something that is happening traditionally and use mobiles, probably this will not move further. We'll have to build a business model which is virtual money, virtual value that is going to operate out of mobiles, which will give people the freedom to do what I want, when I want, where I want, rather than follow the rules that banks have in terms of KYC, account opening forms. Because the micro transactions in this country, where the cash to check ratio of transactions is adverse, the cash exceeds the checks probably by 2 times, whereas rest of the world it is less than fraction. It's 0.70%, 0.20%, 0.30%. So this issue of unaccounted cash and suddenly becoming accountable, being tagged to a mobile number, will have to be addressed. And the new business model will come where values will be reflected and not money, to bypass the rules and the regulations.
Hello. Yeah, thank you, Mr. Ravi. By the way, before I start, it's not so bad being a telco, as you said at the beginning.
Sorry, I have telcos as my clients, so I'm happy.
Okay, I'm the last speaker, and there is an advantage and a disadvantage. Advantage is I can summarize everybody's points and sugarcoat as my own. I'll try not to do that. Let me just try and bring a different perspective to this debate. We have established with the previous speakers that mobile money or mobile commerce, whatever name, is required. It is important to drive the economy, at least in a country like, or unbanked or underbanked country like ours. But the mute point is who is the one who's going to lead the way? I mean, is it going to be banks? Is it going to be telcos? Or let me bring a third set of people, or is it going to be handset or the device operators? Now this is the third is typically not very strongly considered, but I'll just take this example back to the data. When people used to say, who is going to lead the data revolution? Is it going to be the telcos, or telcos are going to be the dumb fat pipes, or are they going to be leading the way? But immense amount of effort was put and data was not going to the next level. And then in came iPhone and it changed the world. So now we are talking, I think Sanjeev touched upon the NFC. So that is a very important and critical element. We need to see which of these three is going to take the lead. Interestingly, banks and telcos both are extremely regulated. And we are talking about the marriage of two extremely regulated entities. How is it going to pan out? The time will tell. Banks see telcos trampling on their territory when we go to banking, and telcos see banks are not cooperating when we try and do the mobile banking. That's the who will lead the way. As a telco, what do we bring to the table? I think point has been very effectively made. The distribution might, we have a billing relation with the customer. We know exactly where the customer is. In fact, the joke in telco circles in Alpana, you are familiar, is that we possibly reach more people in the country than even Salt reaches. There are more people who have hypertension and blood pressure and don't eat salt than people who don't have mobile. But anyway, that's the perspective. So distribution and all that has been, but one more thing which I want to add on. Telcos have got immense transaction volume handling ability. I think in telcos, just to give you a very small perspective, telcos handle 20 million transactions in a day. In a day. When I say 20 million transactions approximately, you're very familiar with that. Incidentally, me and Alpana have worked together sometime in the past. So every prepaid transaction worth 10 rupees, 20 rupees that happens through the mobile wallet or the VTOP as the retailers call it, there are 20 million transactions that happens in a day per operator. And this is, I'm talking about Idea alone. So this is an immense volume handling capability which beats any other number that you can think of. And India, incidentally, leads the way in the world. Nobody in the world has got that kind of transaction handling capabilities. So that's what do we bring as telcos? And the third that I had a point to make was, what are the challenges? I think amongst the various challenges that we think about, you touched upon Narega part. The biggest challenge that we all find in mobile banking is the ability to identify the individual. The identity of an individual is today not very clearly established. How do I know that the gentleman who's walking across to withdraw the money through his mobile phone is actually the name that he claims he is? I think that's a very, very big issue. Mr. Nandan Nilekani's UID project is working towards trying to establish some. But there is, from the government perspective, you might be aware, there is a huge confusion there. Will UID give the identities? Will the national population, resourcing give the? So there's some 40,000 crores being spent, and we are still not sure who's the one who's going to give me the identity, the Aadhaar card. So I think that's the biggest challenge that we have on the identity front. And before I close the discussion, we are all in corporate world. So we are all not the government, whose objective is not to just do financial inclusion. I want to put this question back to the panel, whether is there money in mobile money? How do we make money out of mobile money? For a customer who is going to spend 10 rupees for recharging, is he going to pay me 5 rupees for doing that transaction? Or 2 rupees to do that transaction? I think that's a question that is $1 million question, which I'll throw back at the panel. Because you put me last, so
Okay.
that's about it.
Can I take an attempt at that question?
Go ahead,
Hello?
please, yeah.
Yeah, so I think obviously there is money to be made in mobile money. Otherwise, a lot of us won't be here, right? I think the game in India especially is volume. A provider will make a transaction fee, a percentage fee on volume, right? So on every transaction, you make X. Sure, when you with a game with a captive base of 1 million, you're not looking at much money. But when you're looking at millions of subscribers who are transacting, who are doing millions of transactions a day, the money game is pretty rosy. I think that's the reason we are here. So I think there is money to be made in mobile money. Okay. And there's also socio cause, which is also a great cause.
If I can just take 1 minute to elaborate this point in terms of numbers, you take 70 crores subscribers, 20 million transactions, 25 paise per transactions. Do the maths.
Actually, the maths doesn't work that way. Let me tell you, we're running some of the only deployments in India that work in this, and there is a big question around that setup. So my thinking is that this is a very, very, very long tail business. It will pay off in the 5 to 10 year horizon. It will not pay off in the near term. The cost to deliver the transaction needs to be below a paise. Okay, we've done all the maths around this and figured out all the maths. The cost to deliver a transaction, because let me give you the maths. You need to be able to deliver a 50 rupee transaction successfully. To deliver a 50 rupee transaction successfully, the telco, let's pretend the telco is front-ending it, will make a very small percentage of the setup, typically 50 paise. In that 50 paise, telco needs to make money, and all the people that I talked about in the ecosystem need to get paid. So the cost to deliver a transaction needs to be sub paise. Just as comparison, the cost to deliver a transaction in a bank, the bank typically, it costs a bank 20 to 25 rupees to get a check processed. So it is a long tail setup. It's not very clear right now.
So I think, that debate is already started right now. But I don't know, does every service need to be launched for the purpose of making money? Whether, you launch or make a simple call, then you start off with your internet service, you get the Wi-Fi service, and then you have all these varieties of VAS services, and now this m-commerce service, right? But the world doesn't stop for a telco, and the idea is you have to keep doing something new, don't you? In every sphere, if any vertical industry becomes a stagnant industry, it is going to die. So I believe, and from an overall principle of whether it is a banking industry or a telco industry or pure consulting, it does not matter. You still need to be in service. If you want to offer products, you have to offer it. But the key here oftentimes ends up being you already having some kind of an infrastructure. Some telcos will make money out of it. Some other telcos will use it as a customer stickiness point. So there are various KPIs that can be generated as a result of this particular, uptake, if I may, call it that, depending upon how much will be the uptake on mobile financing. So let me just ask here one of the questions to Sanjay, right? Sanjay, in terms of the overall context here, everyone is pretty much carrying a mobile phone. Forget about these students, the teenagers and the younger students, they are all, wanting a mobile phone. I remember my 6-year-old says that how can I be without a mobile phone, right? So everyone in the industry carries a mobile phone. But how do you see the overall role of mobile phones changing? And the aspect, I think a lot has been talked about. If we can refrain from referring to those particular comments and give a little bit of a fresh perspective, how you see the world moving towards a totally different paradigm shift if we were to be centered around something which is called God, right? So can you please address that?
Sure. That's an interesting context which you have put, Alpna. And if I relate it back to where you were talking about that the infrastructure is already there, how do we leverage? So In fact, interestingly, just about 2 months back, we were talking with our NTT Docomo, who's our strategic partner in Tata Teleservices, and how they saw the whole evolution. They thought that if we really look at the role of mobile on a 4-stage cycle, I think right now we have just reached the second stage. So probably the first stage was where mobile was just a communication device. Now it has moved to a second stage where it has become an information access device. So whether it is a video or gaming or any of the cool apps, so as to say, are only giving information access. But now we have to move, we are just on the verge of moving to the third stage where mobile will actually become a lifestyle infrastructure device, where actually it is serving any aspect of lifestyle and life assistance. So whether it is M-banking to bank the unbanked, whether it is M-health to get tons of people who don't have access to primary and secondary healthcare to get into that, whether it is to look at real-time security, whether it is to look at location-based services. So the third stage of mobile evolution is where mobile is becoming a location infrastructure or a lifestyle infrastructure. And then from there, the fourth stage would be that where actually with the ubiquitous and a real-time information and analysis available, it becomes a tool for real-time decision making. And that's where it will become a tool for behavior assistance. So just like how today you see a TV or a marketing campaign, and that really drives the consumer behavior. Over a period of time, you will see that the fact that mobile exists is actually will be a non-talking topic. It's just like the electricity is there. But what you do because the electricity is available and what are the new devices or apps you can build will become. So that is where the fourth stage will evolve, where you are actually driving or trying to achieve a consumer behavior in a symbiotic manner.
Okay, thank you for that. Let me ask one of the panelists here, anyone can answer. Do you see, what Ravi has described in terms of, the upcoming model, but do you see consumers ready in terms of going towards that path? Where are our consumers right now? And in that whole journey, what will it take for all our consumers to move in that direction? The telcos and banks and consultants, we are all sitting with very hungry eyes that, okay, there is something in it for us, but I think customers play the most important role. If I even talk about, say, Reliance with my 6-7 different vertical industries, for every vertical industry, I can use maybe M-commerce as an example to say, well, my customers are waiting to get some of this uptake, and therefore it will be of benefit to them. But what is your view? Where are our customers, realistically speaking, right now?
I think the customers would be more than happy to get out of the compulsion to carry cash, though the most critical role that is to be played will be played by the government. As I mentioned, banks have too many problems to handle for themselves. Now, mobiles are used even by small kids, as you mentioned, and somebody below the age of 18 cannot open a bank account. So the mobile wallet is a bank account for all practical purposes. You mentioned 40 crore people will come on to the mobile wallet. If they put 10,000 rupees in the account, it's not current account, it's not demand, it's a fluid account. So banks will take 40,000 crores, put 28,000 crores in SLR, CRR, and then end up paying out this money overnight. End of day settlements don't happen. So the consumers won't get a push so long as private business does not drive it. If government puts the regulations and says you cannot open an account, you cannot do the transactions, your children should not have the money because then the risk of your child won't get kidnapped, his mobile will get kidnapped if he has a mobile wallet account on that. So consumers want this service, they want to be out of the cash, currency, small change, pickpocketing, all these worries. But as long as they have to pay tax and other expenses, they will not go to this. For thousands of years, people have been making payments and huge amount of payments without having any technology at play. Now, technology has to become very comfortable factor. It has to be available across platforms. We mentioned that mobile companies will offer their wallets and mobile money and all this. With number portability coming, can you imagine a customer of X company wanting to change his card and go to other company? he may not be able to carry the wallet from one mobile company to other mobile company. So I think the practical, consumer-oriented business approach, benefits coming on that, discounts associated with putting that cash on that, sharing of income and passing on the benefit to the customer, the way the big mega retail chains have started doing, giving things at a cheaper rate to people who operate out of cash, out of all this, is there. And this is not a business for partnership, madam. As you mentioned, the transaction cost has to be down and it's to be split between two people. Nobody is going to be happy in the end, and there's going to be fight between players. The business has to move into hands of proprietary businesses. Then probably it will pick up faster because it is going to be an advertised business and not a social-oriented business.
I think you mentioned an interesting point. This is not a partnership business. However, I heard a lot of the panelists speak quite loud and clear that this requires an ecosystem, right? Well said, all of us here, and I think that ecosystem word has come into play for a long time for the telco industry. I think banking industry, I'm sure there is an ecosystem as well, and no service really gets launched. But the question is, why would these 2, 3, 4, and especially the telcos and banks want to marry each other? Or is it that we are just fooling ourselves and taking the customers for a ride towards a certain path, and ultimately the services will not be there, the quality of service will not be there because banks and telcos will always be fighting, or technology providers would always be fighting. What is it, that will make sure that we are not ending into a divorce down the line, right?
Okay, let me attempt that. In this entire discussion, what is the consumer looking for? I mean, we are talking about financial inclusion as a concept. From the consumer's point of view, I think he is looking for what concept. C stands for convenience. He is just looking for convenience. He doesn't want the hassle of going somewhere and doing 40 things to get his 50 rupees transferred. He doesn't want that. He's looking for effectiveness, looking for cost effectiveness, efficiencies. So that's the E part. He's looking at security. I mean, he is going to trust somebody with his money and real hard-earned money at that. So he wants to be sure that the person whom he is trusting to is going to be, his money is going to be safe. And finally, he is going to look at speed. Speed is something, I mean, if I have to take 7 days to do a money order, as it is the current way, I'm not happy. So this is what the consumer is looking for. Now, I can tell you from our experience, while I put the question back, I'll tell you that we also have a service which is getting piloted as we talk, which is called Idea Pay service. This is a service which is a tie-up between us and Axis Bank. Both are using the synergies. I mean, the synergies are immense. We know telecom and we have all those strengths that I spoke about. They have got reach. Very importantly, they have got the consumer's trust, the UTI and Axis and all that. I think they have got phenomenal trust and they are keen to expand into the deep interiors. Our pilot is between customers of a pocket of Bombay, which we have started, Mumbai, and Allahabad. So far, this money, if it's a large packet of money, it goes via Hawala. If it is a small packet of money, it goes via somebody who's boarding a train. Yeah? Uske haath mein de diya, paisa pahunch jayega. Now, the biggest challenge, again, I have mentioned this in the past, was the identity part, which we are very comfortable handling because we have customers' forms and all that. And the bank is going to take care of the movement of the money part. So I think I see it very clearly as a symbiotic relation. Let me also take an example, which is I think the favorite example of everybody when we talk about M-commerce, which is the M-Pesa of Kenya. It incidentally started as a parallel economy. We all know that. When the M-Pesa started, where I think they've got 10 million customers using, about 23% of their population is using this. It started off as a parallel economy because Kenyan banking was not evolved and carrying cash in Kenya was like committing suicide. It was that dangerous. So now M-Peso has done what, and now it's back into the legal channel. Because somewhere this money has to come into the mainstream, even if it is cash. It has to come into the mainstream, and that is the point where banking and the channel. I would say telco here is a very effective channel. And they come together. So it has to be a symbiotic relation, and at least till the near foreseeable future.
Okay. No, I think we have got quite a strong perspective on that in relation to some of the point solutions happening, whether it is Idea, whether it is Reliance or Airtel, Vodafone, or any of the operators in the rest of the world. I'm still going to harp on a little bit more of this particular issue, maybe from an application technology standpoint. I think the government, though, is actually, they are doing quite a bit. In fact, for the past couple of years, the way in India, telecom has taken a limelight. It is really a buzz as well as a reality. And it's notable to see the influence that the regulatory bodies have had, without which I'm sure none of this would have taken up, with the kind of speed it has been taken up. And consumers are very, very well aware of it. Now, from a technology standpoint, when we talk about it, and though I'm a telco, I won't be biased towards asking questions which are only towards the telco, but more also from the bank perspective, because banks bring in a strong framework of security, like you mentioned, in terms of making sure that any customer, pretty much right now, is definitely a telecom customer, whether it's a landline or a wireless customer or any kind of customer. There is in everybody some kind of a telco blood in them, right? Now, the fact that technology can bring the telco customers closer to the mobile and the cash that we are talking about, or to the retailer industry, or NFC type of things, where you are ticketing and using it in the metro line, making therefore only one device as your key device to carry wherever you want to go to. I'd like to request your comments on where do we see currently, say, a service delivery platform or a technology platform maturity in being able to take either a bank or a telco towards the launch date, full production version, everything, not just point solutions, right? Make that a reality.
I'm not a technology guy. But I think there are business compulsions. There are business compulsions on telcos. There are business compulsions on banking. And there are government compulsions that they have to have financial inclusion. So I think this thing will drive the mobile banking. On the technology part, I think there are various technologies which have been evolved in across the world, and I can rattle off so much data. And perhaps my colleagues on the left-hand side can do justice to that. But I would just like to mention, I think technology is evolving, and as we speak, if you go to the Google and do an internet, there will be a new technology. Amazon is coming, Visa is coming, you have Google coming into this business. So every day there are some new players coming. So I think technology, perhaps to my mind, is not the central issue. I think the regulatory framework the government needs to make, I think, is the key issue. Not so much the technology, in my opinion.
How about you, Sanjeev? I think you come from that background.
Yeah.
So
I think, if you look at it from, so firstly, I want to spend 30 seconds on the fact that, that there is no way that, the collaboration between, these entities that we're talking about will go away easily. And let me explain why. One of the biggest reasons why telecom is successful is that because each telecom operator is able to interoperate with another telecom operator. So a Vodafone call lands up on an Airtel phone, and an Airtel call lands up on an Idea phone, and that is critical for a banking perspective as well. If you are going to use this wallet to make any kinds of payments, you don't want to be restricted by the fact that the consumer, the other person that you're sending that money to, is the consumer from the same telco or the same bank. And that essentially will drive collaboration. I don't know how many of you, actually you should all be aware that the telcos got together and created the tower industry and all of that. We see that happening in the mobile commerce space as well. Coming to technology setup, very importantly, I think technology plays a very critical role in two areas. One is usability and user interface, because while telcos do millions of transactions a day, some of those transactions are not successful. The calls drop. Once you have that, as in a transaction is not successful, which means I'm charged my 100 rupees, but the recipient doesn't get the 100 rupees, the faith will drop. So unfortunately, it doesn't work the same way in the financial. So security and closure of transaction is a critical aspect. Everything has to be trustworthy and 100% successful. There is no room for failure. So there is a big difference, and so technology can help achieve that. The second important thing is, so usability is a key aspect. How does one use? Is it touch, right? Can I go to a counter where somebody swipes a credit card, instead of swiping a credit card, just touch something with my phone and the transaction is complete? If I can do that, that's clearly a very, very usable solution, right? I don't have to go through features in the menu. The other issue that technology will help drive is lowering costs, and that, by the way, is an important aspect in the industry. Today I'll give you a data point on the core banking, or the banking side of the industry. In the last 10 years in the banking industry, advances have gone up 5x, deposits have gone up 5x. So 5 times the number of deposits, 5 times the number of advances for the banks. This is public sector banks, by the way, in India. The staff in public sector banks have only gone up by 5%. So this is what technology can do. Technology can help bring down costs, and that's critical for the success of especially the topic that we're talking about, which is mobile commerce.
I think, thanks Sanjeev. Yeah, I do agree. I think with technology, whether it is IT, whether it is network, any of these areas, this is like the heart and the backbone of any kind of product launch, service offering, quality, etc., and the connectivity amongst the various operators, various providers of infrastructures, as well as, you know, players who are value-add providers. I think everyone does have a play, but techies are really driving maximum of it, though usually we find that they are at in the background. However, that shift also needs to take place in order for a faster adoption, to make sure that these technology drivers are right there in upfront in terms of introduction of the technology for the product launches to take place a lot more faster, and the customers also to be aware of it, that if they use some of these things, then it will make a difference. I mean, you could have a significant number of service offerings which can be offered for free, while some other premium service for which you are actually willing to pay, right? You are willing to pay at a Starbucks, you know, at a cafe coffee day, sitting there for any amount of Wi-Fi connectivity, etc. And, you know, that's a necessity. So we ought to be very conscious of that. With that, I'm going to ask the audience to take an opportunity to ask any question that comes to your mind. Anyone?
Good afternoon, panel. My name is Rohit Ayal. I am from Marketing and Finance. Considering India as a price-sensitive market, what should be the ideal revenue share that should be shared between the various players in the value chain, so that this M-banking can be pushed in India? Like, I want to know what, like, per transaction, how much share, revenue share should be shared among various players of the value chain?
Okay. That's the secret weapon, you know. But I think, you know, let me just address it first a little generically, and then if anyone wants to add to it, if anyone is willing to share all of that, right? But we'll hire you one day and we'll share every bit of it, right? So, you know, we do a more end-to-end standpoint of what does it really cost to offer a service, right? So cost per subscriber. And therefore, whenever we are doing some kind of a rev share arrangement, it has to be proportionate many times to the time to market, the volume to market in the subsequent phases that the service has to be deployed. And that's pretty much the case, I think, whenever any service is being launched. So that is a generic formula. With respect to how much one player is willing to share with the other player, I'm going to ask some of my colleagues here if they want to offer any advice. What could be a good proportionate, distribution?
If you would have known that, then
And
already
I'll take that advice too.
Then the world hunger problem would have got solved. But I think how you need to see it is because it's a evolving space. Therefore, there will be different business models for different business segments. So a lot will depend on what is the business segmentation offering, while mobile financial services may mean very different things to different parts of the strata. So actually, if you see, the whole platform can serve different needs in across the spectrum. So to the unbanked people, the advantages which is there is that, as Sanjeev talked of, you can look at NREGA, or you can look at unbanking the bank, those guys. In that case, what you are offering is that you are bringing efficiency to the market, and therefore it may even be funded by the government, because in a way it is reducing the current inefficiencies. On the other hand, suppose you may be offering mobile financial services to a SME or a SOHO, where they use that as a platform and actually pay out whether to their vendors or to their employees. In that case, you can actually charge it at some kind of a revenue model, because actually you are giving them the accounting, the real-time cash flow, which they could never have afforded. And then, as Alpna talked of, you can look at the urban population, where you can look at peer-to-peer remittance, people working abroad wanting to immediately send money in an instance, whether it is for actually taking any of the real-time services, whether it is for bill payment, bill POS. Therein, the key value which you bring to the table is convenience. And for convenience, if you give them the value, people will be willing to pay more. So I think in different segments, as the value proposition will be different, the business models will be different.
Yeah. Let me just add one quick point to this setup. So what he's saying is exactly right. The type of transaction will drive what kind of revenue share happens. Let me give you a very quick example. Cash in and cash out, they're the most important use cases. So somebody goes to a retailer and says, here's 100 rupees, put it into my bank. Do you want, as a consumer, to get any money deducted out of that 100 rupees when that is being deposited? The answer is no. But the retailer wants money out of that because he's processing that transaction, everybody else in the food chain. So where does the money come from, right? As opposed to if you're going to use this as a mobile wallet and pay for something, let's say an airline ticket, then it works like a credit card works, right? So there are different types of transactions that will drive different kinds of revenue share.
Okay, thank you. I think let's take a few more questions here from the audience.
Thank you, ma'am.
Hello, panel. My name is Anirban Chaudhary and I'm from System Finance, second year. My question is about can we include government-aided institute like IITs in the ecosystem so that this whole mobile financial services can get a boost? Because there are many new players, entrepreneurs who want to start their businesses in rural India, but they do not have enough money to start.
Your question is whether government-aided institute should be part of the ecosystem.
Yeah.
I think they're already there. For example, IIT Chennai is doing some pioneering work in this field. And Professor Dr. Junjunwala has done pioneering work. So they're already part of the system. And they have a big program on rural outreach. And
Yeah. Government institutions are very much a part of this setup. So, I mean, I don't know, when you say government, it's a very loose word. IRCTC, which is the train reservation setup, is very keen to have mobile payments drive that setup. So you can use a mobile to book a ticket and also fulfill, right? Use a mobile wallet to pay for it. I talked about NREGA payments, which is driving one aspect. LIC is going to use this to do micro payments for insurances. So somebody doesn't have 2,000 rupees to buy a 1 lakh rupee insurance, life insurance for himself, but he can spend 50 rupees a week, which can be deducted from his mobile wallet and all of that kind of stuff. So government is definitely a part of this setup. Government is talking about deducting taxes, income taxes through mobile setup. CBDT is realistically looking at that as an option to try to see how, so there's multiple government institutions involved in this, there's no issue there.
Thank you. Do we have time for one or two more questions here?
Good evening, panel. I'm Vaibhav Sachdev. I'm from System and Finance, second year. My question is, we talked about 12 to 18 months, so we'll see these kind of services being into the market. So, and we have talked about the Kenya case where operator has spent so much money in educating the customer. Now, recently we have this 3G case where an operator has already spent so much money into buying the spectrum. So are the operator ready in educating again for the convenience of the customer to accept these kind of services in the market?
This is a good telco question.
Okay, why don't you take a shot and then I'll give. Okay. So let me give a perspective first. So before the operator comes in, right? So from a handset manufacturer, right? So I'm talking on behalf of Nokia Money. So from a Nokia Money perspective, since we are device agnostic and we are, which someone had raised, we are operator agnostic, right? So our accounts transcend all barriers. So anyone with any mobile service provider can actually use this platform. Marketing dollars is essential. You cannot educate the large population about this service, and the only way this service is going to become sacrosanct with the Indian populace is education. And education equals to marketing dollars spent. So marketing dollars will have to be spent, and a large amount. You mentioned M-Pesa. Of course, M-Pesa spent tens of millions of dollars, and if you look at the initial advertising, back when they started, huge advertising monies, television serials, billboards, whole of Nairobi was painted with M-Pesa. So marketing dollars has to be spent. Now, whether the operators will spend that amount, I cannot answer that. But from a handset manufacturer, from a Nokia OvoPay perspective, there will be money spent because that's the only way you can reach the millions of customers out there.
And I'm glad you are so conscious that telcos have spent so much on the 3G. We are also feeling the pinch. So I would encourage you, friends and families, to do go and buy some of the 3G services and m-commerce services as they come along, because we will give you some good bundled offerings, right? So, but that's an excellent point, and I think we have to spend the money where it is needed and the demand and convenience is there. With that, I'm just told that we are running out of time, and I just wanted to summarize some key points out of this. One of the aspects which probably didn't covered in as much extent, but it was touched upon, is content. And if you look at it, content is king. In fact, any new service in any shape or form, it has really been made successful because of the content that users would like to have, and some common sense material into it, because we are all users at the end of the day, whether it is telcos, banks, suppliers, consultants, but we are all users at the end of the day. So it is important to keep your eye on what content is getting delivered, how it is getting delivered. I think what you really need to worry about as a customer, I'm saying, is the cost, obviously, but also the value that you are getting. And we all need to here worry about how to make that as cost optimal as possible, but without sacrificing quality as such. I think very interesting points came out from our panelists here with respect to the various players in the ecosystem. That was nicely laid out. At the same time, the uptake from the rural versus urban, those kinds of populations is also to be seen as such. And in addition to that, the fact that the banking industry has a good reach, the telcos have probably, a bigger reach, but there are still co-location points where the marriages can take place extremely well. But it is also an important aspect that governments and regulatory bodies will need to continue shaping the framework such that the entire ecosystem gels well and we are able to deliver the kind of service you need. With that, I thank all of you for your precious time here with us, and a big hand to all of you.
Thank you. Thank you, respected panel members. It was indeed a privilege to get the holistic overview of mobile financial services from the representatives of renowned players of the entire telecom value chain. It again re-emphasized C.K. Prahlad's concept of fortune lies at the bottom of the pyramid, still with the concept alive, banking the unbanked. I now invite my colleague to felicitate esteemed dignitaries with memento as a token of our appreciation.
We thank all our panel members to have joined us and would now request them to kindly take their seat amongst the audience.